Good morning, everyone, and welcome to the European crossover webinar. And we're seeing that the euro continue to move up a little bit higher. And let me move this out of the way. And one of the things that we discussed yesterday in the daily wrap-up was, the thought that the dollar index was still not reacting very well to this. One of the things that I myself had done initially earlier in the morning, and I know some people were starting to do it later on, was taking on the euro. And we're still holding. I mean, we're not, blasting higher, but there is that potential here in the euro. One moment. In case you did make it here on the daily wrap up, and we did start a little bit late, I had a personal issue. And as I mentioned before, we try and do it around 2 p.m. Eastern, but I've noted for the first few weeks is it could be a little bit later, it could be a little bit earlier, depending on circumstances. Some circumstances going to be good circumstances, like let's say FOMC, where we'd want to go and do it a little bit later to consider or take in what the action was post FOMC. But anyway, that being said, in case you did miss it, and it is recorded and posted a little bit later if you like, if you're not going to be around to watch it when it's live. Was one of my thoughts that as traders were starting to take it on late on the day of the euro was that we were still pushing higher, and we did get this close right here at this 1324. And we have the ability to move higher here with the euro. Now, I don't think anyone doubts that this market's trying to move higher. There's even been some talk that it can potentially get up to 118. But my thoughts were, and I was indicating to people, is that remember also Trump was, providing some lip service, so to speak, stating the euro is so undervalued. And one of the things I noted yesterday was when we looked at the bias chart, I was hoping we could make a slide here in the euro. We dip like, maybe the dollar would now grab a foothold and we'd be able to slide, come into the low 1280s, maybe 1270s, and we'd be able to take advantage of that and essentially sell the dollar in a rally, i.e., buying the euro. But, the dips that we've had here in the euro, there's been a nice undertone bid. So they haven't been sticking around. Remember, when we came in on Monday, we already had some support here, and I was thinking, well, God, we're already there, because at the time we were coming on the webinar, we were just ticking around that 1298. I don't remember if I did say, okay, then that's going to be a resistance, or maybe I moved it a few pips lower, but the market was already reacting and would continue to push higher. And here's the problem with that, and I was telling people, is that, if we continue to move higher, and from where we are, and to me, your target that we're looking at is this 1372. We had this for 1333, thinking, okay, they may kind of hold when we were working a little bit lower yesterday, but this is our target, will actually be our target initially today, and where I think the market can stretch to, if you come right here, you see that at 1388, we'll actually even draw a little line here. Generally, we come in this morning, we kind of do an overview of what has transpired. Well, obviously, are doing whatever is transpiring, but probably looks like I'm doing or doing the analysis. We haven't even moved into that, but I think it is important. Let's go move here. So our resistance today is just going to be this 1372. We'll probably move it up to 1378 to encompass this 78% of this 1108, 1448, and 38% is 1377 here. So you're seeing a nice, actually a triple confluence here, 1372, 77, 78. One of the reasons I was hoping, I thought that we could pair back earlier, and I thought the dollar would start out Monday under some pressure, which would allow us to um, pick up that euro at a cheaper price, was because a lot of this rally had been on the backs of shorts. Okay. But here's the deal here is that the market, there's no reason for other people to step in and let people off their hook or off the hook. This market just can just let these people just like reminds me like a frog in boiling water, and it can just keep pushing higher and get to 43 and just keep on going. And if someone's saying, okay, I think the euro go weaker, I don't think they're going to step in here at 43. I mean, we're going to see what the dollar does, and maybe it will go on hold. But the point is that it can keep on moving higher, and then the next one you're looking, you go, okay, well, 1350. Okay, well, we'll see how high. And then this is where, if I'm thinking I'm going to get a correction in the euro or a nice pullback, okay, then I'll go in and take it on. Yeah, I'll bail you out about 35 pips higher. I'll bail you out. You know what I mean? That's when I'll step in. But this market can just keep on going higher and higher. And then we end up tripping up here. And then before you know it, then we eventually come back after you got stopped out. And that's my thoughts here that I was pointing to in the New York wrap-up. We actually spent a little bit more time just kind of going over some things where the euro was, the cash dollar index, and kind of, talking about, if you want to talk for lack of a better phrase, just price structure in general. And we're seeing this, so it wasn't as if it was all for naught. That being said, we'll go and take also a look at here, the cash dollar index. Once again, just doing a quick overview, so to speak, although we're focusing on these, but for good reason, because we're certainly seeing some impact there. Now, when we started out the week, I was thinking that, and we'd have to go to the 2-hour chart, but I thought we'd come down to 96.63 on Monday, and then we'd see a nice rebound. And actually, if you remember, our buy chart resistance was 96.91. I thought, okay, we'll probably get it up to 97.11. Here's my take on this is, and I mentioned this also in the daily wrap-up, we're just not getting a bounce here in the dollar. And this is really getting a little bit worrisome here. But we're at our area where we can still hold. I'll show you here in that 96.63. It shows up a little bit more easier on the 15-minute chart, which I've been using. But you can see here, if we can hold this little area here, we did make it here. It looks like we already made down to 63 here. I thought we were going to do this on Monday. You can see here we did, and we stopped short. Then I thought we'd see a nice little bounce here, and we're simply not seeing it. And here's my concern. Once again, as I spent a good, decent portion of the New York wrap-up or the daily wrap-up, was you see we're not getting any response here. And this is very worrisome here. And one of the things I mentioned in the daily wrap-up, but I think it's important as we come into the European crossover, especially since everything is about the same, or actually the dollar index a little bit worse. Euro's on its highs right now at 1341. Is that we're not getting nearly a bounce here. And we've actually come into a pretty good area. Our Boris chart support on Friday was 96.51. We took it out by, I think it was like 4 pips, but that confluence with the 38%. And we got a little bit of a bounce, but not much of a bounce. I'm thinking, okay, well, now we come into Monday. Now we get a little bit of a nice bounce in here, and we're simply not getting it. And once again, we've already had a pretty decent fall here. I would have thought, okay, market's a little bit oversold. We get a bounce back, and we'll look for opportunities to go and short this market. And this market's not holding up well. And my take was yesterday was that peeps are going to be tightening up their stops. And so we're going to get to a point where we can quickly slide down and get to 96.24. about, well, at the time when we were doing the New York wrap up, which was going to be about 50 pips lower, ticks lower. It's not even there now, about 40 ticks lower. And then our target for the week has not been 96.06. That's what we're looking for here. But this market might just turn on and slip right back down again. So let's go on and go over the news. I just want to give a little bit of lay of the land. Look at the cable. Cable's even trying to push a little bit harder. Look at the euro. New highs on the euro, 13.43. Here we are again. Although I don't think that the 13.43, touch on that real quick, is going to hold the significance that I thought it held on Friday, which provided a very good opportunity for us to take the other side of that trade. And so when you're looking here, where are we going to go to? Well, all signs point to this 1372 area here. Confluencing here with the 38% of 1108 to 1815 and 1108 to 1448, the most recent high after a low points there. So, if this market is just going to stay bid. I mean? We're just not seeing the dollar hold here. Okay, so let's go on and go into the news. That's kind of give us a little lay of the land already, and then we'll go on and get into the analysis. British ex-Foreign Secretary Boris Johnson launches his campaign for the Conservative Party leadership today, breaking his relative silence in the race thus far. He's been criticized by rivals for avoiding detailed scrutiny of his program, but the tactic appears to have done him little harm, and he's still regarded as a frontrunner. His insistence on leaving the EU on October 31st at any cost, plus the threat to withhold payment of the UK's agreed exit bill, and proposal to cut income taxes for high earners have all raised concerns among party moderates and in business, but they resonate with grassroots Tories who are firmly right-wing and anti-EU and who ultimately make the decision. In a separate development, opposition lawmakers will launch a move today to try to prevent a no-deal Brexit taking control of the parliamentary agenda. There are signs, however, that they may struggle to get enough conservative parliamentarians to back it. See here. Moving on to the markets, world markets look to have stalled for a roaring start to June that already seemed the best month of the all-country index since January. The dramatic signs in the Federal Reserve's easing speculation that's largely fueled that rally has probably run its course and some say may have gone too far. A relief that the United States and Mexico agreed on a deal on migration checks to avoid U.S. tariff rises has been offset by Trump's less conciliatory rhetoric toward China, upping the ante for the month's G20 summit on Tokyo, as it says Beijing still needs to move on 4 or 5 key issues to avoid tariffs. My thinking here with Trump, like I said, is he's kind of like, I want to say, well, he is overplaying his hand, but I think the deal with Mexico has, to a certain extent, even emboldened him. So this doesn't even surprise me. He feels like some sense of gratification that he kind of got his way, and now he's going to impose the type of pressure to China that he thought that he was able to do with Mexico. So this doesn't surprise me, but that's not going to fly in the face with China. I don't believe so. The S&P ended a silver in the red overnight, with a sliver in the red overnight, with the all world index breaking a 7-day winning streak on Wednesday. To trade almost 1% lower in a big week for Chinese economic releases. May inflation numbers, they're coming in line with forecasts and showed an acceleration of consumer inflation while factory gate prices eased. The big economic set piece later on Wednesday is the U.S. Consumer Price Inflation Report, which will be examined closely to see whether the Fed has a green light for start cutting rates. Futures markets have at least 2 cuts priced in by the year end, and speculation about the first move will start as soon as next week's policy meeting, with Trump lambasting the Fed yet again on Tuesday for not easing sooner and coming in and had no clue of what it was doing. Yes, he knows everything. The dollar's index slipped back lower too, with the euro dollar pushing above 113, above Trump's broadside on Tuesday against what he described as devalued currencies, including the euro, that showed other countries taking advantage of the United States. Elsewhere, oil prices skidded almost 2% overnight as the EIA cut its 2019 global oil demand forecast, and U.S. crude inventories unexpectedly jumped last week. And let's go on Move into the dollar, hovers near 11-week low on Fed rate cuts bets. The dollar index hovered near an 11-week low against its peers on Wednesday. The dollar index under pressure following a sharp decline in long-term treasury yields. Investors' focus is now on the Fed's next policy move on June 18th, 19th. The market is priced in a rate cut by the Fed to a significant degree, said Shinichiro Kadota. So the market is waiting for next week's Fed meeting as a chance to see how much and for how long it's ready to ease policy. According to the CME's Fed Watch, interest rate futures are priced in a 17% chance of easing at the Fed's meeting next week and 80% chance at the following meeting in July. Trump tweeted on Tuesday the euro and other currencies are devalued against the dollar and put the United States at a big disadvantage. For his first time, while U.S. President decided to criticize currency policies of other countries, said Makoto Noji, currency strategist with Nikko Security, but his criticism lacked the strength of earlier statements on currencies when he took the office. Trump has stressed that a weaker dollar was necessary to create U.S. employment. So let's go and move into the analysis. You see it here that you're tagging that 43. So we've already spent a little bit of time here looking at where we can go to. And I'm looking here, my take is going to be right here at 1378. That's going to be our resistance for today. I've already explained why and the opportunity to come to at 1372. Just as on Friday, 1343 was the stretch. The stretch here is going to be 1388. That'll be our stretch right here. And so we're going to go with 1378 on the upside. Be just one more. And support. We're going to have to go with the L1293 for right now. Once we see that big, nice little break here, obviously CPI surprise would allow for this euro to go and come back, but no, let's keep that low in case we do. So we'll just stay with this 1272, thinking that if we come back, that's where we can get to. So we'll keep the 1272 as it's continued to move higher, push these levels. Let's go and move into the cable. We're already bumping up against this resistance we had before, 2744. But there's still the opportunity that we can push a little bit higher. If we can get a solid close above this, it really opens the door for us to potentially move up to this 28.25. It won't come real quick. I mean, unless things start to turn around. We've kind of been consolidating here. I did the nation analysis last evening on the site, and I mentioned here we're consolidating. And if we can grab a foothold and get a daily close above this area here, we can open the door for us to make that move up here to 28.25. On the short term, right here, it's going to be 28 even. So we'll go with 28 even right here. I'll put support right there, 26.88. Just tighten it up a bit. Move into the Aussie. The 69.44 area is trying to hold the market. The Aussie's just been sliding back. I thought we would have done a little bit better, especially in light of how the dollar's reacting. I'm going to put this support potentially if we break lower. That 69.44 is holding, but we'll look for the 69.32 here. 69.32. Not too much lower, but we've already been sliding, and I would have thought we'd have fared better in light of the dollar's weakness. Resistance. You know, it's been the 70.27, but boy, this dollar was really going to have to start sliding in order for that to come to play. We'll look at right here at 69.97. 69.97. There, 69.97. I don't see really anything to do here in this Aussie. Now the Kiwi itself is trying to same thing, hold and right there in that little bias chart area, but it hasn't done very well itself. We're just going to open the door for this is very key area here, the 65.45. We'll just open the door for that just to slide. Right there, 65.48. So this should actually be $65.48. Resistance will come in right there. It's 66. Oh, I see. Yeah, right there. 66.12. Let's go move into the dollar CAD. We had our bias chart resistance yesterday at 33.08. And I think we made it to 33.09. So yeah, 33.09. We're starting to gain a little bit more momentum here. let's see if we can make a further run here. But certainly the Canadian dollar is under a lot of pressure itself, having really had quite the slide this last week. Obviously, any moves back up are going to be opportunities to sell. Let's take a look here on the 2-hour chart and see if we see anything beyond what we already initially looked at, which was 33.10, 33.08, which was not a bad reaction. From there, we fell back 30 pips. But the market's trying to assert itself, so let's see if they can make one more additional move. That would be a pretty good run if it made up there. And I don't feel that, I mean, there's a ton of supply up there at 41. Market is very oversold. Here's the deal. The data that came out of Canada on those jobs was very, very good data. It may have a tough time. Let's go as far as 33.29. See right there? I think that's a good place to step in because I don't think even if we make a run, I don't think you're going to be too worried if they try and go beyond that, but they would have a tough time to get beyond that. So let's go with 33.29. If it can make that move higher. And support. For right now, it's going to be 32.61. Moving into the peso. No changes here. We had mentioned this even on the wrap up. 1906 is what we're looking for. Potentially this market can dip right back down. Well, they've eased back. We made up to what here, 1908. So I guess it was pretty close. But we'll stick with this 1906 for a little extra dip before it's all said and done. No changes there. And the resistance remains at 1923.6. No changes. Let's go and move into the dollar yen. Well, yesterday we had our bias chart support at 876. And we got to 880. And we'll continue to slide back. I mean, but by the time we had 876, the market got up to 880. And when we're on the wrap up, we're at 851, and the yen continues to weaken here. Not weaken, I mean, as far as the dollar yen weakening, the yen strengthening. We're going to stick with our support, which was 805. Right here. Actually, this is we talked about this in the wrap up. Here's 836, but we're going to look for potentially a move down here to 805. That was from yesterday, our 836. And at this point, resistance is going to be right there, 853. We'll go and move into the cash dollar index. as I mentioned, this is really rather worrisome. Now, what's going to happen is today's got CPI data. At least on a very short-term basis, that is going to make or break the dollar index because it's either going to go in and fortify those folks that feel that the Fed is going to have to go, is going to be cutting. And you saw that the CME Fed Watch tool is actually pricing in a 17% chance cut of next week. I don't think that that's likely, but pricing in that chance. Let's go and take a look at how much further we can fall back in here on a very short-term basis. Let's go with 96.43. Just taking out Friday's lows. This one's tricky because I tell you what. Well, if the CPI truly disappoints, this thing's going to grab we're going to hit a pocket of stops, and it's just a matter of how much further we can push. Let's move this down to 96.30 if we do hit that little pocket of stops. And because we haven't had nearly a reaction here, I think the market would be susceptible for hitting those stops and pushing further. So let's go with 96.30. Going to be a big event here, the CPI. On the upside, it's going to be that 96.91 at this point. The stretch would be up here if we saw some big move. Then we could be looking at the 97.11. But for right now, we're going to have to go with what the market's going with, and we're going to go with 96.91. With a little bit of a stretch at 97.11. We'll actually put this in here so that we are, if let's say the news really changes, we'll go there like this. There we go. Let's go move into the crosses. Well, this Kiwi yen continues to slide back. As I did it, I told you I did the Asian analysis for a look on the site, and this thing just continues to weaken further. It's just not doing very well at all. We're going to have our support right now here at 71.12. 71.12. You can see it's just been one continuous slide here. And that was after the Kiwi was really leading the charge, faring way better than the Aussie. And It's just been slide, slide, slide. So we'll go with 71.12. I think we can make a stand there with resistance going to come in. I don't see us getting too much of a bounce, although the Kiwi has been fairly weak. Would be 71.60. If we can turn things around, that's where they want to try and get to, 71.60. Euro yen has been kind of chugging along, but as we said, the yen is starting to strengthen. I think the S&Ps have got a little bit overstretched. I made my 2 cents about that, and I think we're going to spend the rest of summer just sliding down. I'm going to go with support. This is a good level here, but I think we can even push beyond that a little bit. Right there, which is going to be 22.56. Resistance will be right there, 22.97. Well, the euro odd did get that close of 62.62, which opened the door to us move higher, potentially up here to the 63.38 here. Right there, which is 63.39. 63.39. And we actually got up as high as 63.27. Let's take a look at where we stand here on the 2 hour. Got a nice little gravestone doji here on the Euro Aussie. Very nice gravestone doji. Let's go with the resistance here, 63.14. With support coming in right there, 62.66. And let's go into the Euro Kiwi. This has also fared fairly well, and obviously with the strength of the euro continuing to potentially move higher, we can get up to eventually here to the 73.09. We're still holding up very, very well here, and let's take a look here on the 2-hour chart. Boy, some pretty good resistance right there. Very, very good. Well, for now, we're going to go with 72.50. 72.50 for resistance. And support for right now will be 71.61. We are continuing to see this Aussie yen slide even further. I was mentioning that in the Asian analysis from yesterday. And the concern is, look, we couldn't even get a bounce when the equities have had like a huge rally. So really the door is open that potentially we can slide down here to 74.02. Right now, we're going to go with 74.73 for our bias chart support. We just can't even get a bounce here whatsoever. Support for right now is going to be 75.65. 75, I mean resistance, 75.65. And let's go with the guppy. Well, we're trying to hold this area right in here, this 37.56, and we're just kind of meandering around, trying to do the best we can to hold it. If we're to move higher, it's going to come in right there at 38.46. So that's going to be at 38.46, 37.56. Well, we got the 38.45. We're right there, so no changes. No changes whatsoever. And let's go and move into the starting versus the odd. Continue to move, get a little bit further momentum here with this pair. As I said, overall things are relatively quiet. But we're starting to get a little bit further traction here. Let's go and take a look where we stand here on the 2-hour chart. We've just gotten above resistance here. Continue to move up. This support now is going to move up to 82.47. We know how weak the odd has been. And potentially it can move up right up here, 83.98. I'm going to go with that. We're going to think that, well, we do have some pretty good supply coming in right here. A lot of touches coming in right there. That would take us to 83.66. Let's think we may be able to push just a bit higher. $83.70. They're 83.70. Coming into today, as I mentioned, we are going to go and have CPI in the States coming in at 8:30 Eastern. Obviously, my time is 7:30 Central. But 8:30 Eastern, CPI. Reuters poll is for 0.2 for month over month. And that's going to be it, but that's going to be the focus right here. Do we have Cleveland CPI, Cleveland Fed at 11 a.m. Eastern? But the big news of the day is going to be that CPI. And we'll go on and roll back into the main screen. And you can see here the euro is continuing its pressure here. Right here at 13.40. And the dollar's still really under some pressure. I don't think we're going to move anywhere with any real sense until we get to CPI. But it will definitely go on and either solidify the concerns with the dollar. So we'll see what happens. But that's it for here for the European crossover. We'll catch you in the chat room, and thanks for joining us here on the webinar.